All right. That was weird. Welcome. Good morning. It is a great morning. I love the mornings. I am a morning person. I love getting up. Even if I wasn't trading, I would love getting up in the mornings. I like getting sleep, but man, just waking up, knowing you have a good day ahead of you, makes a world of difference. But we are here. We are on day 7 of our 10K to max funding challenge, and we're using Bespoke funding. I'm not affiliated with Bespoke funding. I'm not sponsored by Bespoke funding. They're a newer firm, but really the reason I picked them is because they offer $2 million in max funds that you can purchase, not scale up to over time, but you can actually purchase up to $2 million in funds. And so my hope and my goal is to take this 10K account, use the profits from this account after getting funded, of course, and use that to buy larger accounts that can then buy larger accounts until we can get up to and obtain max funding with Bespoke funding. So that's the goal. That's what we're doing. As far as I'm aware, no one has attempted this, or at least no one has documented this process. And I'm doing everything live on YouTube. And anything that I don't take on YouTube, because I also have a life and another day job currently, I post on Twitter. So if I'm not taking a trade here live or calling out levels and positions, then I'm also doing that over on Twitter at Venator Trading. So if you want to follow along with any of that, it's all here. Last 6 days, you can go watch and see exactly what we've done. But you can see down here, right on our screen, we've got our stats. Phase 1, we are currently funded $0 with Bespoke funding. I do have funded accounts with other firms, but with Bespoke funding and specifically to this challenge, I have obtained $0 in funding. But we're just 6 days in. Today is day 7, exactly 1 week, calendar week of trading. So we are sitting at just over 6%, almost 7% right now. So it's pretty freaking awesome. Very, very happy with those results. We have had 2 wins. We've had 1 loss and 1 break even. So we have taken 4 trades in 7 days. So if you are a trader who takes 7 trades in a day, you're probably not going to enjoy this process. But you might learn something, and you might realize taking 7 trades in a day is a bad idea. Most of the traders that I know that are successful, they don't trade every day. They are hunters. That's what Venator means. It means to hunt. And that's what I'm trying to do. I'm only looking for high probability A+ setups that meet my trade criteria and my trading plan, which if you watch, you will learn what that trading plan is. I'm not here to teach people necessarily how to trade. I'm not necessarily here to teach them what the strategy is. I'm really here to document the process of how you can use prop firms to ditch your day job, which is my goal. That's what I'm trying to do. I don't want to be locked into a 9-to-5 anymore. I love my job. I'm not necessarily like miserable doing what I'm doing. It has been a great job for the last 17 years, and it has done very well for my family. We're a little more than paycheck to paycheck, but besides that, I don't want that. I want to go more. I want to go big. I want to have the freedom and the financial independence, and I want to have the time freedom, the location freedom, and the financial freedom. And that's why we're doing this challenge right now. So What's up, Mohammed? Welcome, man. Glad you're here. Welcome back. I think I saw you on Twitter saying you took that pound trade yesterday, right over here, that we hit our 1-2 winner on and got us up to 6.7%. So way to go if you did do that. You had pointed out a fair value gap in here, that 1 hour fair value gap on the GBP, and I was expecting it to dip up higher, and that's what we actually got up in on. And the nice thing is that it's given us a nice, beautiful breaker on the 1 hour time frame now that we can look at a potential reversal in New York maybe, and try to close this thing out today. But getting ahead of myself, talking about the challenge. Man, the things are going really well. Super excited. We use 2% risk on our daily loss plan. So Bespoke Funding has a 5% daily loss limit. We have a personal loss limit of 2% per day. Because I'm only taking high probability setups, and I know that my win rate is a little bit better than 50%, I risk 2% per trade. And I know that over the course of time, with a 50% win rate and a 1-2 risk reward, we're going to be just fine. We probably will hit a losing streak. No big deal. When you're up 6.7% and you lose 2 in a row, you're still in profit for the challenge. I would still be at 2%. So I'm not super worried about that. I don't really even focus on streaks. I just focus on high probability setups. That is what we're here to do. It's find the big game, take down the trophy bucks. We're not looking to take rabbits and squirrels. We're not shooting turkeys. We are looking to take down the big trophy game. And if we want to get to $2 million in funding, it means we're going to have to be consistent. It means we're going to have to be patient. My big, hairy, audacious goal is to try to obtain $2 million in funding by the end of 2023. And I think we can do it. It's going to go slow in the beginning because you're starting with a 10K account. And then once you get funded, you have to wait 14 days. And assuming everything goes super well in those 14 days, you can get a payout. And depending on what that payout is going to determine what the next account size that you can purchase is. So it may just be another 10K account, or maybe we get a 25 or a 50 or maybe even 100K, depending on how well, once we're funded, goes. We are still in phase 1. Like I said, we're just under 7%. We have to get to 8. So because we go for 1-2 risk reward ratios and I risk 2% per trade, I only need to get not even a 1-1 trade today to pass this challenge. One of the features that Bespoke talks about, at least that they offer, how we may experience it today or tomorrow, maybe if we don't take a trade today, but if we can find a good setup, that is, and price cooperates and moves in our favor, they are supposed to close out your account when you hit your profit target. Like it automatically, just like on the other firms, if you breach your daily loss limit or your account balance limit, it automatically closes out your account. Well, they've reversed that and said, hey, we will also close out your account when you've reached your profit target. And I guess one of the benefits of that is, like, if you're taking trades in the middle of the night, let's say I set up a limit order on euro dollar and I go to bed. I live in the States, so London session is like 2-3 o'clock in the morning here. I'm dead asleep. I used to get up for London and I was miserable. I hated it, and I don't want to do this career and be miserable in it. So I would set limit orders during London, or before I would go to bed, if I identified an area where I think this is a good place where I think London's going to spike into and then reverse, whatever. And if you got into a trade there and your trade went into and crossed your profit level, but you were asleep, on the other accounts, on the other firms, they don't close that. So when you wake up, you could have passed your challenge and then price could have dropped back below your entry and you're no longer passing your challenge. So with Bespoke Funding, they've said, hey, we have software and we've told it it's monitoring these accounts, and when it reaches your profit target, it will automatically close your trade, so you don't have to sit there and monitor it to the second when it is crossing that profit target. It will automatically close. We will send you your congratulations email, your certificate to pass your phase or your funding, and then you get your next credentials supposedly immediately. So again, this is my first time with Bespoke. I've never used them before, so we're just kind of trying them out, and we'll see how that process all plays out. So yesterday, man, this is why we take 1 to 2. This is why I always go for 1 to 2's risk reward ratio. If you had held thinking price was going to make a new low for the day, you would have gotten slapped. But because we go for the low-hanging fruit and we are trying to find high probability setups that help us consistently, repeatedly, over and over again pick low-hanging fruit, we were able to capture a winner yesterday. And if you had moved to break even thinking, oh, well, we're going to let this thing run and take out the low from yesterday, never did. Ran back above. Consolidated, and then overnight, all night from Asia through London, we've just been falling off the cliff. The dollar's been strengthening. Foreign currencies have been weakening. The nice thing about this, like I just said earlier, is here on the pound dollar, we now have, oh, by the way, these are our 2 winners. I mean, if you're just joining us and watching, we called both of these trades right here on the stream through analysis. And they've both worked out wonderfully. But let me get back to this analysis. So yesterday we had identified this fair value gap on the hourly time frame right here, and we had said when we got on the session yesterday morning, we were looking for a pullback, and price was beginning to give us a pullback, and this was an OTE area all right here. We have an order block up here. You have fair value gaps all the way through, coming up through this big move down. I was really anticipating price to get back up into this hourly order block, and if you even drop down to a 15-minute time frame, you can see we actually have a 15-minute breaker block right here. The down candle that then runs up, clears out liquidity, breaks back down through with a fair value gap. My entry was at the bottom of this breaker, and price actually ran up into the fair value gap inside the breaker, which is, again, I've said this for the last 6 or 7 days, probably my favorite entry model. A fair value gap inside a breaker is kind of my bread and butter setup. It's not the only A+ setup, but it is one of the best A+ setups. If you can find a good breaker with a fair value gap, targeting that fair value gap as your entry will give you a primo risk to reward ratio, because you can set your stop loss just above your breaker or a few pips above it, and then you're just going for 1 to 2. Those are easy 1 to 2s typically. It's not 100%. I have just slightly better than 50% win rate. So, man, these traders out there that are looking to grab more than 50% win rate are going to experience an extreme amount of frustration. But that trade that we caught on that down move on this candle on the 1 hour time frame, look at this. We've swept liquidity. So we took out liquidity above an old high. Where did this move start? On this down close candle. The last candle to move down that sent price up to grab liquidity, and now we have broken this. This would have been a bullish order block. If price was going to turn bullish and start a new bullish trend, it would have respected that down close candle as an order block to then run higher, but it did not. Price broke through it, creating a breaker block. This order block that grabbed, that was the point at which we started to run to grab liquidity, then gets violated. That turns into a breaker. There are no fair value gaps on the 1 hour time frame in here. So that's not really, you could just wait for price to get up to the bottom of that breaker and put in an order. It's not how I like to do things. I like to go down and see if I can identify 30-minute. You can see you could either use this big down candle, you could use, there's a smaller candle inside of here. There's no fair value gaps here. You do have a 30-minute order block up here that price has respected twice now there. After it broke through, it came back, and it came back again and dug into the wick, to the body of that 30-minute order block right there. So potentially you could expect price. Well, first of all, if we just look for the rundown, so here's your London high down to our current low of the day. So an OTE lines up if you want to buy when price is in a premium. So we want price to come back above this 50% area and reach back up into this OTE, which is right in line with our hourly bearish breaker. So, you know, taking an entry in here at the top of that OTE is that 30-minute order block. If we drop down to our 15-minute time frame, you can start to see there's a 15-minute order block in here, right around our OTE area. This fair value gap, does it hold? Maybe. We've got relative equal highs sitting right here on our 15-minute time frame. So we would anticipate a run up as New York starts for the pound, and at least get back up into this area. You got relative equal highs up here too. You're still inside this hourly breaker, so really, you know, 5 minutes is as low as I want to go here. Yeah, nothing is jumping out at me as like the perfect entry spot, other than just running this liquidity, but it's not back into a premium, so I probably wouldn't take that. I really want to see price come back into a premium. I really like this area right here, a deep dive into the OTE. Maybe a retest of this fair value gap right here, which is also kind of around this fair value gap right here. So we had a break of structure, came back up, rejected, break of structure, came back up, displacement down, fair value gap. We've reached barely into this fair value gap multiple times, and then we've made a small drop, and now we're kind of making a rally. So yeah, I think I'm going to wait for pound, probably to get back up bare minimum to that 24, maybe 60 level, somewhere up in here, 24.60, somewhere up in there. We'll just watch and wait. That's kind of what I'm seeing on the pound right now. At least that's what I'm anticipating. That's what I would want to use if I'm going to take a trade to try to pass my challenge today. And that is not the goal. The goal is not to find a trade so I can pass my challenge. You cannot think like that. You're going to pass your challenge if you just hunt high probability setups and you use a 1 to 2 risk reward and you have a 50% win rate. You're going to pass your challenge. Stop. Don't look at your account balance and go, oh. Now, I'm aware of what my account balance is, and I know that when I find an A+ setup, I don't have to get 1 to 2. I only need 1 to 1 today, or on the next setup, not today. Whatever that next setup is, when I'm ready to execute, I need a 1 to 1. And actually a little less than 1 to 1, because I'm risking 2%. I only have to make 1.3%. So not even a full 1 to 1, and the challenge would be passed. Sorry about that. My ring just hit the mic. Sorry. Yeah. that's what we're looking for on the pound. We do have some news coming into 8:30. I think there's some unemployment claim numbers coming out, I think. But yeah, we're just kind of chilling and waiting, man. Like, we're not in any kind of big hurry. I will probably be streaming for a couple hours this morning, at least. I don't have anything pressing to do this morning, so we'll just sit and watch and wait. I would love to be able to pass a day. Don't know that I will. Don't know that we'll find the setup that we need to do that. But we'll give it a fair shake. I don't like sitting the charts more than a couple hours, because you start really trying to see things and create narratives that aren't there. It's just the way our brains work. But yeah. So one thing you'll notice here is that the pound did not take out yesterday's low. We still haven't done that, but the euro has. Euro dollar has taken out yesterday's low. And let's jump up to the 4-hour here on the euro. We are in a downtrend. Price is moving from higher highs to lower lows, moving left and right across the screen. So we want to trade in line with the trend. Our next draws on liquidity are down in these areas that we marked previously at the beginning of the week. We've already taken one of those areas. The next one, we've already filled in the lower fair value gap on the next draw on liquidity. So, you know, potentially price could stop right there. I'm still bullish dollar, and we'll look at that in a minute. So I think the dollar still has room to run, which means I think euro still has room to run a little bit, and pound as well to the downside. So we're making market structure that is respecting bearish market structure. It's respecting bearish order flow. It's reaching up and stopping around order blocks, breaker blocks, and fair value gaps, and then it's making new lows. And then it's retracing back into breaker blocks, fair value gaps, and order blocks, and making new lows. And so we want to be in line with the trend. Those are going to be our high probability setups. And if you can find a trade idea that is based around a higher time frame point of interest, such as an order block, or a higher time frame breaker, or higher time frame draw on liquidity, etc., those are the ones that are going to be your bread and butters. When you only look at like a 15-minute time frame or lower, it's so easy to convince yourself to take a position that you're not aware of what's happening on the higher time frame narratives. Those higher time frame narratives are what drive and move price to the next draws on liquidity. And so always make sure that you know what your bias is and where you want price, where you're expecting price to draw to. So if I am bearish, I don't want to buy low. Price is currently low. I'm sorry, I do want to buy low. I don't want to sell low. I'm bearish, so I'm only looking for sells. That means I want to sell when price is in a premium. Now, that doesn't mean it has to get up here. Just in the current leg, if we're going to continue a bearish trend, I want price to retrace into a premium of that, the range there that we're working with. So for this, it would be this current leg. I want to see price come back up into a premium level somewhere in here before it starts trying to make a new low. It doesn't have to. Price can just run away, and that's fine. We don't miss trades. If there's not a high probability setup that fits your system, there was no trade to miss. Now, if there was a high probability trade and you didn't take it, technically you missed that. You should take every high probability A+ setup that you see. This is how you make money. Because if you have a 50% win rate, you need to participate in every event that offers you your setup. This is how casinos make money. They participate in every single wager. They have edges of 1, 2, 3%. That's the edge they're working with. And they know they can make money after 1,000 wagers, no matter what wager happened on wager 50 or what happened on wager 250, over the course of 1,000 wagers, because they participated in every single event. Statistically, they cannot lose. They can't. And it's similar, not to say that we're gambling, because we're not. We have an edge. The casinos aren't gambling. They have an edge. The gamblers are the people who don't have an edge. We have an edge. And so if we're going to be casinos and make money consistently, we need to participate. This is a probability game, so we have to participate to give our probabilities an opportunity to work in our favor so that our edge can put us over the top. So that's why we only take high probability setups. We want our edge to work in our favor. We don't want to take anything less than the absolute best. We don't want to risk our capital that we have worked so hard to save and to use to build this career. We don't want to waste it. We want to get the maximum value we can from it. So we hunt, we stalk, we are patient, we are quiet, we sit and we wait for that trophy buck to come out, and then we take our shot. What's up, Corey? A little late. It's all right, man. We haven't done anything. We've just been chatting. We've talked a little bit about pound dollar. What would I be expecting on euro? Euro has broken yesterday's daily low. The pound has not. I would want to see price come back up into where would I want to see price come back up to? I think, you know, if we're gonna grab this leg, your OTE is going to be back inside of here somewhere. There's a fair value gap up here. You have this order block in line with that fair value gap. So potentially, if I was going to be wanting, at least based on the hourly, we are looking for sells. I still think there's more downside move here. But how deep does it need to retrace? I don't know. This could turn into a 1 hour order block here. This is a 4 hour order block up here. You got your 1 hour here. We're getting rejection off of yesterday's daily low. I do want to see a pullback. Where that pullback needs to happen, you've got this 30-minute order block right here. You've got some fair value gaps above it. Does price want to run that high in New York? Maybe with the unemployment numbers that come out at 8:30. You get some dollar weakness initially. You get a retrace that then tries to move lower. Again, I'm just looking for my setups and the way I see this. So you do have this candle right here would be a breaker. You had a run up to take out previous highs, grab liquidity, took out this high, and this high on this run up. This is the candle that caused that run up. Down move before your up move to grab liquidity, consolidate, displace now back below it. It wasn't like super aggressive displacement, which is what I really like to see on a breaker, is like a strong move through that leaves a clear fair value gap behind a breaker. Technically that is a breaker, and you could see price maybe come back up into the 50% of that breaker. If it's not going to make a deep run, you could anticipate somewhere in there. If I was just going, I'm just eyeballing like 50% of that candle. That's just an eyeball, not popping a fib. Where does that line up with? Ironically, it lines up with this order block. Right there, 15-minute order block right there. So maybe you get an opportunity somewhere around here. Yeah, we'll wait and see. Again, I'm not like licking my lips at, oh my God, here's the beautiful, look at that setup. That's the one. We're going to need to let price play out a little bit today. London only gave us one-sidedness. So typically New York, after a one-sided London session, likely will either consolidate through London, or you'll get a retrace and then a pullback. This is your London highs right here. These relative equal highs. Does it want to take out the London high? Maybe. I don't know. That would be a really deep pullback. News would have to have a significant impact. Where would your target be if you entered? 1 to 2. I mean, for this challenge, it would be 1 to 2. It's always just 1 to 2. So the 1 to 2 is dependent upon where I'm going to put my stop. I don't target necessarily liquidity draws on this account. I have other accounts and other strategies that I trade that I do not trade 1 to 2 on, that I'm targeting lows. So if I was going to look at that, I still think, again, so we were talking about this, I think right before you got on, Corey, but this was our initial draw on liquidity, which we hit yesterday. We rallied back up, and then we've now taken out yesterday's low. The next draw on liquidity would be this 4-hour old low here. We have filled in this fair value gap completely. You can see this is where price is at. We're trading below. We have filled in that entire fair value gap there. So price does not have to necessarily move lower. If it wants to find a reason to go higher, we've reached it. Now, the draws on liquidity are here. And then you've got I think this is a daily. Nope. Weekly. Where was that? Why did we notate this? Monthly? Oh, there it was. Weekly volume imbalance down here. To me, that's where I think we're probably going to go before we start making a run higher, because it gets us back into a discount of this long, several week run higher. So yeah, it's around an OTE. It's back into a discount. It's a volume imbalance. And then there's some liquidity right above it that it probably wants to tag on the daily time frame. Daily swing low, weekly volume imbalance. I don't think we're going to come all the way back down here. I mean, potentially you could. We got Fed Chair Spout Powell talking tomorrow. Today we have unemployment claim numbers. I don't know why that red folder news doesn't show up here on today's calendar on TradingView, but I saw it earlier on my my FX calendar book thing. That's where I'm in long-term higher time frame analysis. I think we're gonna draw down there to that. So you've had Monday's candle, you had Tuesday's high of the week, which we called on Tuesday. I said there's Tuesday's high of the week. I said that for dollar on the low. I said that for pound and euro right there. And then we've just been trading lower. So you've had an open, a high. Now we're going to look for a low either today or tomorrow, and then a close. So technically, the low could be in. We don't know. I'm anticipating a little bit more downside here. But that's where my initial targets would be, that daily swing low and this weekly volume imbalance here. But for my entries on this specific challenge, I trade 1 to 2. So that's my target. That's where I think price would go. If I see my setup, that's what I'm looking at. Again, so the 30-minute would be, somewhere around here, and your 15-minute order block. So somewhere somewhere in here. I think we get a pullback. We take out some of this on a lower time frame. If you keep dropping down, which is what retail traders do, who are looking just to find all the massive moves, you can see a very steep trend line has developed. So that makes you want to believe price is probably, and now we've consolidated, we've based out after this steep trend line. What price typically wants to do after basing out is reach back up into some of that trend, grab some liquidity. There's obviously some here and here, and you've got London's relative equal highs up here. I don't know that it gets back up there that far today. Maybe it does after taking out yesterday's low already. But on the pound, we haven't taken out the low yet from yesterday. We still have yesterday's low intact. And I'm kind of favoring the pound here to move lower, get back above a premium level, dig into some of this, and retest some of these fair value gaps, this one and this one and this one. We'll wait and see. Let's look at US30. You caught a bit of the sell, the overnight sell, like this morning, Corey, or yesterday? This morning. Good for you, bud. Well done. I was anticipating, again, a little. I keep waiting for London to give some pullbacks, some false moves to grab liquidity before it makes its runs, and it's not. It's just running. But I like to see liquidity get grabbed and then leave behind some change of structure that allows me to participate in a continued move in whatever direction the opposite side of the false move. So didn't get that. So yeah, I'm just looking for good setups. Yesterday, man, I was really, really wrong about what I thought US30 would do. I will say, I did say, be cautious. There's relative equal highs up here, and that's buy side liquidity. I thought price would come back up in here to this fair value gap and then retrace. It did. So right around here, I said, hey, I would look for a move up at the market open, take out that high, and then a drop, and then test an order block and move down. And instead, we did get the initial drop that I anticipated, but it didn't reach down further. It just rallied all day yesterday very aggressively. I just still think that this is a not fun environment for indices right now to find high probability beautiful setups. We're just moving sideways. We're taking out both sides over and over again. And I want to participate in trends more than consolidations. I'm not a very good range trader. It's easy to get chopped up. It is easy to find some 1 to 2 trades in those kinds of environments, but yeah, not for me. So you've got some buy side. It's taken out a little bit. Now you've got relative equal highs. You've got a order block up here, which is also a 1 hour breaker because you had a down move, an up move, grab liquidity, and a massive displacement. And that breaker on this time frame, 1 hour time frame, has never been traded back to. So do we get a pop back up into that breaker right there? You've got buy side liquidity that they've engineered with relative equal highs. You do have, if you want to buy and you want to target those equal highs, and you've got a massive buy side imbalance right here. It has just trickled down into it and then shot back up. You have more of a fair value gap here on the 1 hour. I hesitate to say what my bias is here because I just don't really have one right now. Had price respected and started creating a new trend down, I would feel better, which was what I was anticipating this to do, was to create and take out these lows, create some structure and start moving again. But I don't think the indices are really going to do anything until the whole debt ceiling crisis is resolved here in the States. So is there going to be default? Is there not? Blah, blah, blah. And so the markets just don't really have any on the indices. They just don't have any direction to go, and they're just engineering liquidity until there's going to be a big move. It's like a spring. You wind it up and then it's just going to pop. Like, you can't hold it down forever. It's going to go. And so when it does, then we'll get back in and we'll start looking for opportunities to participate in that. But right now, I don't really want to have anything to do with US30. I do like trading US30 when it's moving. You can get some great moves. Like when it tries to trend, you get great moves. But when it just does, like, we still haven't left this range. We're still trading inside this range. I mean, and we're at like 50% level, just above 50% level of it. So it's just not a high probability environment. Stay away from it is my advice. The Forex is trending. Go where the trend is. Like, don't just be like, oh, I only trade US30. Man, this is why you should have multiple pairs that you look at. I'm not saying you have to have 10, you don't have to have 15, but you should have different markets. So the Forex market, the indices market, the metals market, commodities market, whatever, like, have a couple of markets that you're watching, because when one is looking like this and it's just rather disgusting, the other one, it could be moving. And that's what we're seeing on the euro and the pound. Look at this beautiful trend on the 1 hour time frame. Same with the pound, beautiful trend on the 1 hour time frame. Dollar, beautiful trend. The dollar's trending and the indexes aren't. That's not normal. So stay away from them. But we can use the other markets while we're waiting for whatever our favorite might be. I don't really have a favorite. I just look for my setups, and I watch Euro, Pound, and US30. I'll analyze the other charts, but I don't typically take trades outside of those. There's no reason to. They offer plenty of setups and plenty of opportunities to make money. Hey, doggy's behind me. Probably needs to go to the bathroom. So dollar, I'm anticipating price to get up into this weekly fair value gap at the bare minimum. So I think that's why I still think we have room on both the pound and the euro to the downside, is because I think price is going to reach up into that fair value gap on the weekly time frame, and potentially reach up into that high there, which is around 50% of that fair value gap previously. So it's a little bit above the 50% level, but that's kind of my initial target. My dog's scratching at the door here, so give me just 1 second. Let me go. All right, I had to let him do his business. He'd been holding it all night. All right, dollar. So yeah, that's why I still think we have some upside here. We've got an hourly order block down here, or 4-hour order block down here with a fair value gap. So again, if we want to buy when price is low, we're expecting a small retracement perhaps from our London move. So somewhere back below this level here could be what we're looking at. So that was the Asian session. So we had a gap up, came back down through, and has just been rallying higher. So we want to see price come back down, at least into this fair value gap here. If you look on the 30-minute time frame, it's going to line up with the 30-minute order block in a discount. So that's a nice area for me to target right in here as an order block. And on the 15-minute, it would be this level right here. So yeah, it's kind of what I would like to see happen, and then we'll wait and watch. And I can stay on for a little bit longer today, so we will. I would love to be able to finish out this challenge, but I'm not going to force it. If I don't see a trade, I'm happy to wait till tomorrow. There is no rush. There is no rush. This bespoke funding has no time limit. I don't put a time limit on myself. I'm just trying to find good high probability setups. And if you want to be funded with these prop firms, you can't operate in the mindset of, God, I gotta pass, I gotta pass, I gotta pass, I gotta get funded, I gotta make money. Money's gonna run away from you if that's how you decide to trade. All right. Yeah, I don't know. We don't really have much to do. We're coming into the 8 o'clock hour here. Dollar's just consolidating. Pound is consolidating. It's actually making a run back up now towards that 50% level. And the euro dollar is not making an aggressive run up like the pound is. But the pound is retracing. And we have a 1-hour order block here. I'll just notate that this is a breaker block. That whole thing is a breaker. And I'll put my breaker block color on it, which is my teal. So inside of there is where we would expect price to want to reverse. And if we come back down, we can see the 30-minute area right here. So we can bring that in a little bit. And you have a 30-minute order block in the top part of the OTE area. There's no fair value gaps inside of here that really get me super excited. There's one here, but it's still in a discount. And we want to see price be above this 50% line into a premium area. If you drop down to a 15-minute time frame, you've got these two 15-minute candles. You've got two smaller ones here. But these are the larger breaker block that we identified, those two 15-minute down candles. You have a 15-minute order block right here. There's no real fair value gap. Technically, that could be considered a fair value gap when you have a big wick like that. ICT has talked about this a lot. I don't have a lot of data, so I'm not going to use that. I would probably leave that alone. It could reverse right there. You're back above 50%. You're approaching that OTE. I would like to see price on the 5-minute time frame. You can see some fair value gaps that have been respected. It's now drawing up above this liquidity here on the buy side. It's filling in this fair value gap. I want to see it move and retest like this fair value gap, which should be orange. There's also this fair value gap here and these fair value gaps over here. But this is the one that I want to see. What does price do right there? You've got a 5-minute breaker right here, up here. So you had a down candle, up move, took out liquidity, displacement back through, fair value gap inside of a breaker. Again, they are beautiful setups. They're beautiful setups. Down candle, up move, grab liquidity. Displacement back through the down candle that started that initial move up with a fair value gap. You wait for price to come back up into that fair value gap. I mean, it's just an easy 1 to 2. It's just so easy. Low-hanging fruit. It does not have to be complicated. So yeah, that's what we're waiting and looking for here. I don't want to go any lower than the 5-minute time frame, but that old 5-minute fair value gap right here is right at the OTE level. It's also inside 50% of this 15-minute order block, which is also inside our 30-minute breaker block from yesterday. So we'll wait. I kind of want to wait to do anything until after the news. Let's see, we've got about 40 minutes, looks like, until the unemployment numbers come out, and we might get some more movement. It's interesting to me that the euro took out yesterday's low and the pound hasn't. It's only interesting to me. It doesn't give me any more information about what I would want to do, like bias-wise, but something of note. For our pound trade to work out and get back up into here, into this area, and we start testing some of these old fair value gaps here and here and here, then the dollar would need to drop, as we've said, probably needs to drop down into this level, into that order block here at the bare minimum on the 15-minute time frame, or this 30-minute order block here. If this 30-minute order block gets violated, what does that turn into? A breaker. Down candle, up. Grab liquidity, displacement through becomes a breaker, and you could look to try to find a 1 to 2. It would be tight because if displacement is just reaching down to grab this liquidity, we're in a bullish move. So again, I'm not looking for sells on the dollar, which would be bullish for the euro and the pound. I'm not looking for that. A higher time frame narrative would have to come into play to convince me. It's quite the daily volume imbalance here, though. That's quite the daily volume imbalance. That doesn't mean it's going to come down there today and fill that back in, but this is my target for the dollar. And you can see where we're at on the pound. This would be my next draw on liquidity for the pound. If we look back over to the left, you have a small, it's filled in that fair value gap, and it has maybe just right here tipped into this tiny little fair value gap right there. But we still haven't filled that in, so you have a draw there, and then you have a swing low down there. And yesterday's low. All of those are draws on liquidity. All right. We're just sitting and watching and waiting. I am going to take a short little Nature Calls bathroom break. And then give me just a couple minutes and I'll be right back. All right, back. And I don't know if you guys are coffee drinkers or not, but coffee seems to get everything moving. For me, anyway. TMI, I know. All right. Getting a little bit of, so we're coming into our hourly close here in just a couple of minutes. I have some clocks above me. That's why I keep looking up there. I've got the typical trading room clock. So it's like the old school, like, minute, hour, second spinning. And I've got Houston, which is where I'm at, New York, London, and Tokyo. Just kind of cool. I'm like, cool trader vibes. So I like to keep up coming into the close of the 7 o'clock hour, going into the 8 o'clock hour here for New York time. And we're just watching and waiting. We've reached above these relative equal highs here on the last hour. Which is what we're expecting. We're expecting price to make even a deeper run up here in the next hour. So during the 8 o'clock hour, we're anticipating price to run up into an OTE, this OTE area, optimal trade entry, ITC concept. I use it to help build confirmation. It's not, I don't put it on every tool. It's just really more for me to, I can most of the time just visualize OTEs now. Like I know where you can look and just eyeball where 50% is, and then a little bit above that is your first OTE level. And yeah, so you don't have to draw it on there, but I put it on here just so y'all can see, oh, this is how you build confluence. This is how you build an idea and anticipating areas that have multiple levels to creating high probability setups. We have a breaker block that ran highs. We've traded back through it, which also is in line with an optimal trade entry from this leg down. You have some fair value gaps that were respected on lower time frames inside of all of that. And so those are the levels that we're looking for. You're like, well, why don't you just take a trade right here off of this fair value gap and run it up into that area? Because it doesn't have to go there. It does not have to go there. This fair value gap right here above this liquidity may be all it was reaching for. That may be the only thing that it was trying to do, to rebalance this into this order block so that we can run yesterday's lows over here. I don't take counter trend trades. Do they work? They can. My experience is that it's not worth it. Like I'm here to manage the capital that I have. I have a limited amount of capital. So I want to find the best setups that provide the best chance for me to get low-hanging fruit. That's not a low-hanging fruit. That's you hoping it comes back up there. Meanwhile, you're in a downtrend on a higher time frame. So what is price most likely going to do after it reaches a drawn liquidity and internal rebalance of price? It could very well just reverse right here, and this could be the New York high of the day, and then it just tanks. It doesn't have to get back up here. It's where I want it to go. That's going to give me a better entry and a more higher probability setup for price to run lower. And use these as targets, these fair value gaps as targets and sell side liquidity. So that's why we do what we do. We just wait. We just wait. Started our new hourly candle. We've had a bulls, if you're bullish and you're like, oh, screw this downtrend, this thing is going to take off and start running high. It might. So you could look at this as a liquidity grab, a break of structure with a fair value gap, and you could, bulls would be looking at getting inside here to run back up higher. I would not advise that. You're in a downtrend. Just trade with the trend and just wait and be patient. There's no rush to any of this. I wonder how long it's going to take to double my current stream viewers. Max concurrent stream viewers so far has been 3. Not a pro streamer by any stretch. But I am sitting here reading price action and calling out trades live, and having success with it, given since I've been streaming a limited time frame. I've been trading for years, so it's not like I'm new to trading, I'm just new to streaming. And so I know the data's not there for people to be like, oh, let's go watch this guy and maybe learn a little bit. For free, right here on YouTube, every day. All right, the hourly candle has opened, and you can see we would anticipate if price is going to reach up, we need an open, a low, a high, and a close. So we would expect a bullish candle on this next hourly candle here to retrace back higher. This wick right here could be the liquidity grab to fill in that fair value gap that sends us lower, and these become order blocks to continue the downtrend. This is really the level we're most interested in. This is the 1 hour, just above our 50% line. The bottom of this box, this blue box, this is our breaker, our 1 hour breaker. We grabbed liquidity and we've displaced below it. There's no beautiful fair value gaps in there. These two wicks that overlap on these two candles right here, let me zoom in so you can see this. This is the idea that ICT has talked about recently. I have not back tested this, but when two wicks overlap each other, I think he calls it an implied fair value gap. I think that's the term he uses. He has so many freaking terms to describe his concepts. I mean, the man is a freaking genius when it comes to system development and creating an entire lexicon of verbiage to teach how he does what he does. But it's like drinking from a fire hose. There's so many concepts to use. You can't use them all. Can't use them all. I think it's I think this is when two wicks overlap like that on either side of a candle. I think that's an implied fair value gap. I could be totally wrong. I don't know. I think I heard it in a video somewhere. I've watched all of his content, the hours. I've sat through the hours and hours of rants. I think he's kind of funny, honestly. Like, he's definitely a special guy, man. Like, he himself admits, if you've listened to any of his Twitter spaces, wow. Like, you've seen... The Twitter spaces are hilarious, dude. They're... One of the first times he got back on Twitter and he started doing those spaces again, he was out driving his car. And he started freaking out on this guy driving. I think he was like trying to cross a bridge or something, and this guy wouldn't give him the right of way, or I don't know. But in the middle of his talk, he's like super calm, and in the middle of his talk, he just freaking unloads on this dude. dropping F-bombs. And I'm not against cursing. I'm not going to do it on this stream. It's not needed. But God, it was, and he'll even sit there and tell you, hey y'all, I'm bipolar. And it sounds like he is. I'm going to take him at his word. It is a legitimate health issue, mental health issue that people deal with. I've known people personally, close relationships that have been bipolar. It's not an easy thing to live with. Not only for the person who's living it, but for the people that live with those bipolar people. So hats off to him, man. He's figured out how to do it and be successful. And he's not scared to put it all out there. Like he flaws and all, you get him for exactly who he is. But the dude is certainly a genius in my mind. I mean, honestly, it's his concepts that I use to be profitable and get trade funded accounts with and gain more funding. So I would love to see him pop in here one day, just randomly blow the stream up. That'd be freaking cool. The ICT crowd though is ravenous, like absolutely die-hard cultish ravenous fans of ICT. Most of them aren't very good traders. They try to incorporate just too much of what he does and what he teaches. So it's, but man, he's fun to listen to. But to sit through all of his content and all of his lectures, it's a lot. It's a truly a dedicated endeavor that you have to commit to if you're going to go through all that. And I found what works for me. So thank you, ICT. I'm not here to teach his concepts again. I'm here to document my journey to go from $0 funding for traders out there that are trying to get funded and use this to ditch their day jobs. This is the process I'm trying to document. I have other funded accounts. This zero funding achieved is specifically to this challenge. So we'll put it all up here live as we go, and hopefully we'll grow it. Have you guys had Corey, or I don't know if Muhammad's still in here or not. Have you guys had funded accounts before, like actually been funded and gotten payouts? Has that been part of your journey so far? Would love to know that. Dollars just consolidating, doing absolutely nothing at the start of this hour, probably waiting for those unemployment numbers to come out in about 20 minutes before we get any more movement. Maybe we get a spike down into here, and then we get a break of structure or something on a lower time frame we can participate in. But Euro also doing nothing. A lot of rejection off of dailies after grabbing the daily low yesterday. We've dipped into it several times over the last few hours. It hasn't sent price rocketing back up, which is interesting. Again, kind of in line with my bias. I think we get a pullback, but I'm waiting for the pound. It's cleaner to me. Very first time trying to get funded. Well, I wish you success in your first attempt. I have failed so many challenges. So many challenges, man. Like it would be sad to a lot of people how many challenges I failed. I was not ready to start taking them, and this was back with like FTMO time, when FTMO is basically the only firm out there doing this. I was like, hey, I can do this. I know what I'm doing. I did not know what I was doing. I was ignorant. Still really trying to refine my system, and I felt so many challenges. But it's kind of one of those things, it's like when it's in your blood. Like there's a show, I don't know, Corey, if you've heard of the show Gold Rush on TV. I think it's like on History Channel or something. I don't know. But I love that show. I think it's fascinating to me. I haven't watched it in the last few seasons. It's gotten super repetitive. But in the early days when it first came out, I loved watching that show. And they were like, once you're a gold miner, you're always a gold miner. You're never not going to be a gold miner. And it's the same with trading. Once you're a trader, once the fever has hit you, you're never not going to be this. And I told my wife, you know, I would fail a challenge. She would know. She'd be like, are you sure this is what you want to do? I'm like, babe, even if I never get funded, this is my thing. This is what I do. Like some people golf, and they're not professional golfers. They don't go out there and make millions of dollars playing golf, but they spend hundreds of dollars, thousands of dollars a year in fees, paying for golf, buying clubs, buying balls, buying equipment, buying clothes, renting carts, you know, paying the club. I can't. Why is my mind not? What's the name of the thing that you pay to? Whatever. You know what I'm talking about. They got to pay to play golf, and they do it whether they suck at it, and most of them do suck at it, and they keep playing. And it's kind of the same. I told her, I was like, whether I make any money or not, I'm not going to play golf. I'm going to sit here and watch charts and learn how to read price. And so I failed challenge after challenge after challenge. I would pass phase one. I'd be like, okay, I figured this out. Blow phase two, pass phase. And so then I got into a season where I was passing phase ones, couldn't pass phase twos. Then I got into a season where I could get funded and blow funded accounts. And now I'm at a stage where I can get funded, stay funded, get a payout. I've lost funded accounts even during then, and I've still lost challenges. I don't win every challenge. But I'm now profitable. Like I'm no longer, well, I'm profitable in the sense that right now I win more than I lose. I'm probably not profitable overall since I've started trading. I haven't gotten like a $50,000 payout. Not that I've spent $50,000 on challenges. It's in the thousands, but I've also now made some of that back. I may be profitable overall. I don't know. I need to go back and actually really look at that. But I'm reading your comments here. Giving it a try. I mean, you got to try it sometime. And if you have been, so February of last year, so 2022, I mean, man, you're over a year into education. I don't know how much time you've actually spent in that last year getting ready, or just demo trading or paper trading or live funded account on a broker. I don't know what you've been doing, but man, way to go on just jumping in there and paying for a challenge and trying it out. You're not going to know until you get in there and do it. And that's what people don't understand, is that you don't learn demo trading how to trade live. You don't learn back testing how to trade live until you have skin in the game, and the dollars going up and down actually make your heart race, and you get short of breath as price moves against you or in your favor, and you get super excited or you get super depressed. Those things cannot be learned back testing. Those things cannot be learned demo trading on any account that you're demo trading, because it doesn't matter. You know, your brain, your subconscious knows this is not real. This is not real. And when it becomes real, everything changes inside your brain. Everything changes. Oh, cool. Stock trader. Put another $100 personal account, made 15 pounds so far. Spent another 50 pounds on a 10K funded, $200 spent in total. 200 pounds is a lot of money, man. It's a lot of money. Don't act like it's not. Don't let other people tell you that it's not. You see all these traders on here posting on Twitter or Instagram, and you see all their payout certificates in the thousands and thousands of dollars. And the reality is most people are probably in your boat where you're like, man, $200 is a lot of money. Spend it wisely. That's why I said yesterday in yesterday's stream, whatever amount you have to put into beginning your trading career, $500, $1,000, $1,500, whatever it is, divide that number by 10. Give yourself 10 chances. So divide that number by 10. If it's $1,000, you got $100 per shot. You can buy 10K accounts. If you've only got $500, then divide that by 10. You've got $50 for a challenge. There are firms out there. I think Smart Prop Trader, their 10K account is like $37 right now. To me, they don't have the best rules and conditions for prop firms, but for price point, you can't beat it. You can get a 10K account for like $38 with Smart Prop Trader. So there are plenty of prop firms out there. What I'm saying is no matter your capital account size right now that you have to use to start this prop firm trading journey, there are prop firms out there that have account sizes that you can leverage your smaller amount to get a 100 times larger account with a 5K account, and you've only got $500. Well, I guess that's 10 times larger, not 100 times. But still, would you rather trade 5K or 500? 5K. Leverage other people's money if they're going to give you that opportunity. Yeah, I mean, I wish the same thing, Corey. I think about all the time that I've quote unquote lost not doing what I'm trying to do right now. I just turned 48 on Saturday, and I've been at this since I was around 43, 44. It's when I really first started putting effort and energy into this. Don't let that scare you to think, oh my God, is it going to take me 3 or 4 years? It might. If you listen to like successful trader podcasts, if you read, if you get online, the people that you follow, you ask them how long it took to be profitable. Most end in years, not in months. Most are going to say 2 years, 3 years to become profitable. Now, finding a good mentor, finding a good system right from the start, finding a group of people that can help you deal with the ups and downs that you're going to experience as a new trader can drastically cut that time down. I did not have that. I jumped around from strategy to strategy. I jumped around from community to community. I jumped around from mentor to mentor. And, you know, it would be good. They'd go on a winning streak, and then every system will go on a drawdown. They go to drawdown, and I'd be like, oh, screw this. This sucks. This guy doesn't know what he's talking about. And I'd go find the next strategy, system, or mentor. Maybe find a little success, and then drawdown. Oh, screw this. They don't know what they're talking about. I'm on to the next thing. So I've done indicators. I've done support and resistance. I've done market structure. I've done naked price action. I've done rejection candles. The thing that, and probably all of those, and I think I tweeted this out the other day. There are millionaires. There are guys that are making millions of dollars trading by using moving averages. There are guys that are making millions of dollars strictly trading support and resistance. There are guys that are making millions of dollars strictly trading breakouts. There are guys that are making millions of dollars that strictly trade price action. There are guys that make millions of dollars that strictly trade ICT smart money concepts. In the end, it's about the trader. It's about your ability to execute your trading system and to know what your edge is. If you don't know what your edge is, you don't know the data, you don't know what your expected win rate is with your edge, you're not going to be consistent. You're not going to be profitable. Man, You're just a spring chicken, man. About to turn 20. I have a son who just turned 21. I have 4 kids. They have all left the house. My wife and I started. We were very young. We got married. I was 21. She was 20. And then we got pregnant with our first kid about 9 months after we were married. And we knew we wanted to have at least 3, maybe 4 kids. We had talked about this quite a bit. And then we were like, and we know we wanted them kind of close together. So once we got pregnant with the first one, we were like, oh, well, not our original plan of timing, but here we go. We're going to start having kids. So we did. We built our family young. I loved it. I loved every minute of it. It was hard at times, but I'm so grateful for the way that all played out. We're extremely blessed and fortunate to do it that way. But the cool thing is now, we're in our mid to late 40s. Our kids have all left the house. 2 of them are married. The other 2 are working on building their careers. And it's wonderful, man. It's great. We're still young enough to have energy to enjoy life and do the things we want to do. And, but yeah, man, 20 years old. I wish I had learned this when I was 20. My boys, I have 2 boys. They are not really interested in trading. I think some of it is they've seen the struggle that I've gone through for 4 years trying to get to the point I am right now. If I was making millions of dollars, they'd probably be like, oh yeah, let's learn how to do this. But I haven't gotten there yet. And maybe that changes and they want to jump on and do that. Cool. I don't push them into doing anything. They love what they're doing. They're living their lives and doing their thing and making their own way. And that's totally cool with me. But yeah, I wish I had learned when I was 20 years old. It could have changed things dramatically. It could change things dramatically for you, man. I hope it does. I hope it does. And maybe hanging out here, you'll learn a little bit and potentially not have to go through the same pitfalls that a lot of new traders go through. Muhammad, how long have you been trading? We have about 5 more minutes until the red folder news unemployment numbers come out, and that's when I'm expecting some movement here in the New York session. So far, it's been extremely dead. I do want to see a pullback if no one is jumping in. But if you're watching this later and somebody watches, we're waiting for a pullback up into here, and so we're just killing time right now. We might look at a couple other charts after this news hits if we don't get any movement. 18, man, you guys are young. Holy cow. $18? Man, I can barely remember what 18 feels like. Now I feel really old. Got you guys by like almost 30 years. Hey, you're young enough to not have developed, hopefully not developed, a tremendous amount of bad habits when it comes to how to trade. I think for young people, the good things about being young is you have a much higher tolerance for risk because you have time on your side. You look at things and you're like, man, I've got so much time ahead of me, and I can just, if this goes sideways, I can redo it. I'm only 18. I'm only 20, whatever. So your risk for tolerance is going to be a lot higher. But the bad part about that is that if you're not extremely disciplined, you're going to have a tendency to want to gamble. And if you hit a winning trade on a gamble, it's going to reinforce that desire to do it again. And it's going to blow up accounts for you. So you have to fight the urge to just, F it, put a 10 lot on, let's go. If it blows the account, it blows the account. I'll work for 2 weeks. I'll buy another 10K. It's $50, whatever. So don't do that. Build the skill set and the mindset and the discipline right now. Skip that phase. Don't go through it. You don't have to go through it. You're going to have enough losses and enough emotional trauma to deal with in a disciplined trading career that you don't have to go through it, man. Just stop. Still my first year. Dude, there are so many good traders out there to learn from. Yeah. See, that's what I'm talking about. Luck. Luck is the worst thing that a trader can experience when they first start trading. That's the absolute worst thing that you can have is good luck when you're learning how to trade. There is an element of luck. Every trade has a random outcome. There is no guaranteed outcome for any trade or any position we take. But if you started out doing something and you got lucky, you have just unknowingly put yourself on a very steep learning curve because you think you were good. You think that that this is easy, and it's not. 6K at 18. That's the life right there, isn't it? Yeah, I could see how that would light a fire under your ass to keep doing this. But, like I said, that's the worst possible thing you could wish for any new traders, for them to get lucky. The amount of psychology and emotional maturity and self-discipline it takes to be a pro at this game is off the charts. Like, it takes so much. It takes so much. All right, we're starting to get some movement. We got 30 seconds. Market's anticipating news coming out, and you're starting to see movement here. We're running a little bit lower. News is coming out. It just dropped. I don't know what the numbers are. I don't really care. But dollar's spiking up. Euro is spiking down, making a new low of the day. Pound is not making a new low of the day yet. If we get a strong hourly close below this blue candle, this up candle, this would then become an order block that we could target for a retrace, then to move lower and try to get involved there. So kind of what we're looking for. If we're not going to get a pullback, then we want to trade with the trend, and that means we're going to be looking for order blocks to be formed on higher time frames. This would be a higher time frame order block that we're looking at. My other dogs look like they're going to have to come out for a minute, so I'm going to quickly take a break here real quick, because I hear them over there. All right, we're back. Sorry about that. The wife came down, giving me the evil eye of. So my office, we just moved into a townhome, and my office setup where I'm trading is downstairs, and our door to our little yard outside is right here inside the office. So for the dogs to go out and do their business, she's got to come down through here to let them out. She's like, I'm not coming out there while you're streaming. All right, I'm getting some movement here. Dollar running up into that weekly fair value gap. This is our initial target. I don't know that we're going to get euro is tanking. Just a massive run up. I would use this 15-minute breaker right here to target. If we get a strong close here and we get a fair value gap on the next candle, you could look at potentially here on the pound as this being a breaker. So you had these 3 consecutive down candles that moved up. We grabbed liquidity, hit that order block, and closed in that fair value gap. Displacement down below this level. These are your 15-minute breakers. Let's see if we get anything clearer here. You could use these 3 candles as a 5-minute breaker. That gets you a little bit not as deep of a run. But if price is just going to run away and not retrace back up into this OTE area, it cleared out this buy side liquidity, cleared out that fair value gap, rebalanced price. This move up, this aggressive move up, cleared out liquidity, and now we've had displacement back below that low. That's your breaker block, and we'll see if price comes back up in here and doesn't leave a big fair value gap on this next 5-minute candle. Then potentially you now have an opportunity to target like 50% of this, whatever this fair value gap ends up being, inside of this breaker, and then you could potentially look to take a move there. So I'm going to move over to my MT4 terminal right over here to my other side, and I'm just going to, I'm not going to place any orders, but I am going to get some stuff set up in case we want to take a position here. So I'm just, again, I'm not calling out anything yet, not in a position. I don't know that I'm going to take a position. I do want to kind of see how this 15-minute candle closes, because if we don't get a 15-minute closure below this level, all we've done is grabbed liquidity from today's low and yesterday's low, and that could be just send price back up higher into our original expectation area. So I want to see this 15-minute candle close below these bodies, preferably below that wick, but for sure below these bodies. If we don't get that, then I would not be looking to go short right here. I would think that this is just a stop hunt to retrace further into London's move down and get back up into here before we see another rollover. So I love watching candles print. I love watching price deliver over and over again. It's fascinating to me. Absolutely fascinating. There's the way it's like staring at the ocean, man. I love sitting at the beach and staring at the ocean, seeing the waves come in. Excuse me. Very similar. Watching the way price starts moving. So this 5-minute has no it has a teeny tiny little wick, I guess, on the bottom. But you can see it reached back up. It looks like it's going to leave a small little fair value gap here, which would be above this 5-minute breaker, but still inside this 15-minute breaker here. And really, if you're going to frame this on the 15-minute time frame, you still have 6 minutes. A lot can happen in 6.5 minutes here. But if you're going to frame this on the 15-minute time frame and use this as your breaker position, about halfway through that is where that red line is. That's from an old low over here. Relative equal lows. That's where that red line's from. I just leave that on there. I don't treat it as support and resistance, but I do like to know, oh, that was a stop hunt. That was where old sell side liquidity rested. But if we get a close around here, I could use this 5-minute time frame, potentially target that fair value gap there, which is about 50% of this 15-minute breaker on a higher time frame that took out liquidity and displaced down. Remember when I was talking about guys that were like, oh, why don't you just take a counter trend trade right here off of this fair value gap to target that OTE? This is why. Price does not have to come back up to the OTE. It does not have to deliver and retrace to a certain level. I wanted it to get back above this premium level of the London move. It didn't. It just wanted to grab this engineered liquidity, rebalance price into this order block to displace lower. And that's what it did. If we had tried to take a counter trend trade, gotten slapped. Bad idea. Trade with the trend. Price didn't get above a premium, so there was no opportunity, according to my system, to take that trade. But now we do have a 15-minute breaker. We've got 4 minutes until this candle closes. And it looks like we're going to get a pretty strong close below this level. So I would be looking for something like this at the bare minimum. I only need to make on my next trade opportunity 1.3. But if you were going to do the normal 1 to 2, it would be somewhere down here, which is lining up with our next liquidity grab and the 0.5 standard deviation from this leg down. If you used, this is why I would probably rather want to do something like this, target that fair value gap, but I would probably want to do something like that. And then move my stop up, probably above that swing high. And then I can, you would shoot for something like this. This is framed, again, trading with a lower time frame. If this closes back up inside, I wouldn't even be anticipating this, but if we get a close in the next 3 minutes, somewhere around where it is currently, you have a breaker structure, breaker block, 15-minute breaker block, fair value gap, 50% of that fair value gap, your stop above. Really aggressive stop would be just above the candle that created the fair value gap. I would probably want to give it something like that. And then 2 to 2.2 to cover commissions and spreads, somewhere around there. I only need to get to like right there for this first phase of the 10K. $15-minute time frame, got a couple minutes left. I want to see this candle not close back up inside this range and create a big wick that was just grabbing liquidity from yesterday's low and today's current low. If it closes back up inside of here, then I would anticipate a run above these highs and back into this area, into this 1 hour breaker over here. The dollar has almost reached that liquidity level that we highlighted earlier this morning, which is this old 4 hour swing high. If it leaves it in place right now and we get a pullback, it's going to run it tomorrow if it doesn't run it today. This is a weekly volume imbalance, or fair value gap, sorry. So I would anticipate some kind of reaction from the dollar off of this level. It's been extremely bullish all week. I'm not saying it's going to do a full reversal, but I would expect after it, if it grabs that liquidity, if it fills in this fair value gap, I would expect it would be logical to think that you get some kind of pullback a little bit, maybe back down into this order block off of that before it tries to run higher at all anymore. All right, 15-minute, 24 seconds. It's doing what I don't want to see it do. It is just grabbing liquidity there. So no trade for me, no setup there that looks good. I don't see any low-hanging fruit that is extremely appetizing. Liquidity grab, heavy displacement, liquidity grab, heavy displacement back into the range. That is not what I want to see. It may work out, but that does not fit an A+ setup, in my opinion, because this 15-minute breaker didn't hold. Like it didn't close below. We want to see displacement close below a breaker for that to be a valid breaker for me. I don't know if that's actually accurate for how ICT would teach it. That's how I do it. So I don't care exactly how he does it. This is my system based on his concepts. Full credit where credit is due. We didn't get a close below here, so I have no interest in going short right now. The news spiked lower, which could have just been a stop run. Dollar has reached up into our target zone up there aggressively, and so now it does not have to go any higher. I do think it's going to take out that 4 hour swing high. It could leave it in place today, creating relative equal highs that it runs tomorrow. And that's perfectly fine. We're in no rush. We want to be in this for the long game. Are you guys on Twitter? Because if you are, I don't know if it's too much to ask to say, hey man, tweet the stream out. I don't know if you have, what kind of following you have, or if people follow you, but any promotion is good promotion. If you like what you're seeing, appreciate the like on the stream. Click like, click subscribe. All the things that all the YouTubers say every time somebody comes on their stream. Feels weird saying that. I'm really doing this to document for myself. I think when you're teaching and you're revealing what you do and how you do it, you learn more about who you are and your strategy in the same process, and you can become even a better trader than you initially thought you were. That 5-minute fair value gap, it's getting rejection off of it right now. Again, this trade may have worked. I don't know if any of you took that. I'm not saying it's going to work. It does not fit my system for a high probability setup because the 15-minute did not close. We did not get displacement yet below this 15-minute breaker. We did grab liquidity, but we haven't had a close below, and so I'm not interested in getting involved in anything there yet. On the euro, on the 15-minute, we don't really have a breaker because no liquidity was grabbed up here earlier. We've just had a strong break of structure. We do have liquidity below. You could look at somewhere back up in this fair value gap if you think. Let's see, do we have a breaker on a 5-minute? I don't see it. This would be where I would want to see something grabbed into to create a breaker, and it did not. So you have a good fair value gap that you could target for a pullback and run that down. But again, nothing here that I'm falling in love with. On the euro as well. Dollar, again, it looks like it's going to try to run that high. US30 is showing a lot of weakness, but again, I'm just, there's nothing in US30 that makes me want to get super excited. So I'm not really going to spend any time there. There's sell side liquidity here and imbalances that it may want to reach into. If it wants to go higher at all, that's where you would think it's going to want to try and drop into if it's going to be bullish, but I have no bias there, no clear bias on US30, so I'm just staying away. That 5-minute fair value gap would have played out wonderfully. If you took it, great. If you didn't, like me, I wouldn't have taken that. I would have passed my challenge in the last 5 minutes had I taken that. And that is the logic that screws people up when they look at stuff like this. And they're like, oh, I missed it. Oh, you didn't. You didn't miss it if it doesn't fit your criteria. If it doesn't fit your A+ setup, you didn't miss anything. And if there's no A+ setups today, we'll get back on the charts tomorrow and look. It could be an A+ setup tomorrow. I've made 6%, over almost 7% in 7 days of trading. So do the math on a 100K account. 7 grand. 14K on a 200K account. 40K on a $2 million max funded account, 7% in 7 days. So we're not in a rush. We're not in a rush. Yeah, I mean, again, dude, I'm glad you're following me here. I'm glad you're following me on Twitter. But when it comes to taking trades, you have to determine what your perfect setup is. Now, you can watch and you can learn, but you've got to push the buy and sell buttons on the setups that fit your A+ criteria. Don't click buy and sell because I'm clicking buy and sell, I guess is what I'm trying to say. And don't not take a trade that fits your system if I don't think it's a good setup. That is the downside of being involved in a community or having a mentor. If you only take positions they take, if you don't get involved in a position that fits your system or what you see, and they don't take it, and so you decide to stay out too, and then you get mad because you're like, oh, that fit my system, I should have taken that trade. You have to know your system inside and out. Mine is very simple, and I have very simple criteria, and if it fits it, then I'll take it. If it doesn't, I don't. And I'm not mad that I didn't get into that position. I'm not mad. It's not even 9 o'clock yet. There's still a good hour and a half of market left today that I can find another, I might find another trade. And if I don't care. The market's going to be here tomorrow, and I get to do this all over again. It was a great setup. I wish the 15-minute would have closed below. I wished it would have closed down here, and then that run up on that next candle, I would have taken that 5-minute fair value gap trade. If that 15-minute candle had closed below these bodies, I would have clicked sell on that 5-minute. I said that. You all heard me say that. It just didn't, and so I didn't take the trade. That's what it looks like to be a disciplined trader. Didn't fit your system. And now it's running away to your intended profit target. Sad, but that's just, I mean, it's not even sad. It just is. You're just watching price. You either caught the wave or you didn't, and just sit on your surfboard, wait for the next wave to come. You don't want to take the small little waves. You want to take the ones that you know are, I don't know any surfing lingo. I don't know why I'm talking about that. Now, if this 15-minute candle gets a close, I would be looking at, so in the next 5 minutes, we're about to get an hourly candle close. If this candle closes down here, this is your hourly order block that you can look for price to retrace up into and then fall away. Dollar has grabbed liquidity there. It has breached that 4-hour high. It no longer, now this would fill in that fair value gap. It doesn't need to fill in a fair value gap. Old highs are more important in my system than closing in a fair value gap. It's breached that 4-hour high. It has grabbed liquidity above there. It does not need to go any higher. It can fill in this fair value gap. It can close above it, and then this fair value gap can become and act as resistance for higher runs up. Euro is just, it also has grabbed its low from way over here, and this fair value gap would be its next intended target to reach into. It does not have to. So strong hourly close. I would expect the next hourly candle to pull back in here somewhere. It doesn't have to come all the way back in and fill in this fair value gap. It can, but if it's going to run higher, you would expect a small little dip and then a run up, leaving a fair value gap behind that it would later target to rebalance at some point in the future on the dollar. Pound, looks like we got 4 minutes left. If we get it again, if we get a strong closure here, then I would anticipate in the next hour a run back up, maybe towards the body of this. I'm going to just draw out where the body of this 1-hour candle is right here. So that level on your 15-minute time frame would be inside your 15-minute breaker. So here's your 15-minute breaker, run up, grab liquidity, displace below. That's the bottom of your 1-hour candle here, your order block. This would be your wick off of that. On the 5-minute, interesting. That 1-hour order block, the body of that 1-hour order block lines up with that 5-minute fair value gap. So I would look to see if this fair value gap could be respected again. It wicked up all the way through it once. If it comes, oh geez, what the heck? I'm not sure what just happened there. So if price comes and retests that fair value gap again, now that is framed off a 1-hour order block back into a 15-minute breaker. Now that we've had a closure below 15-minute breaker, 50% of that breaker also in line with a lower time frame 5-minute fair value gap. That is a pretty setup. I do like that. So as this hourly candle closes in the next 3 minutes, again, we want to see it close below this blue candle. It can close inside the wick. I would be okay with that, but I would prefer it to close below that wick, and then get a retrace back up. Our 4-hour candle has left a fair value gap. We got, yeah, this 4-hour candle is about to close. So you do have a fair value gap above that rests inside that OTE. So that's something to be aware of. If this trade plays out and works, then it doesn't need to get back up there. But knowing that there's a fair value gap above that 4-hour, there's a imbalance here that has offered no buy side. It's only offered sell side. And it is inside an OTE. So kind of want to be wary of that. Price could, now that it's grabbed liquidity, taken out the low of the day, rebalance this fair value gap that we notated earlier in our stream. It could just want to get your, it's made a new low. So how low does it need to go? Well, potentially down to that before it would retrace. The 0.5 standard deviation of the last leg down would be my initial target. Plus there's a draw of liquidity a little bit below that before it makes a new leg back up into that fair value gap. 1 hour, we've got 20 seconds. It looks like we're going to get a little close below. So I'm going to set my sell limit order here, and I'm going to put it at the bottom of that fair value gap, and I'm going to put my stop up here. And that's what I'll be looking at. Okay, so my entry, my sell limit is placed. I have a sell limit placed at 24333. Oops, why did that? There we go. That's my sell limit entry. My stop is 44.48. And my TP is 2.2. So 24.08. And I do 2.2 to cover stops and commissions on other things. So that's what I'm looking for. We'll see what happens if we get an entry or not. 24, what did I say? 24333. That is a position I'm going to take. So if we'll see what happens if we get this hourly open, pulls back up and tags us in, we would anticipate a drop lower. The 4-hour is opening, so you're expecting the 4-hour to open and wick up and put in if it's going to be open, high, low, close, you want to see the 4-hour open, high, back up into at least that wick. I want to see it get up there. My stop is right here. If we get invalidated, then I would anticipate price is going to pull back up into this OTE area. So if we get slapped, we get slapped. Don't care. This fits my system. We have a 15-minute breaker. We have a 1-hour order block. We have a lower time frame fair value gap that has been rejected once. I'm anticipating it to be rejected again. Now, I only need because I'm at 674, that's almost 7%, so I need 1.3% basically. A 1.3 R. I need 1.3%, and I'm risking 2%, so that's not even a full 1-to-1 risk reward. So how do I do the math here? I need to make If this trade gets triggered, I need to make $126 to pass this challenge. And I'm risking 200, so that's a little over 0.5. So 1-to-1 would be that would be a $200 that would put me for sure over. I want to say it's going to be 100 would be 0.5. So it's going to be somewhere around there. If this gets triggered and price reaches that far, I would be able to win my trade, or win my phase one, close out phase one. So if I can get a tap in, a quick retrace, we can wrap phase one up this morning. I don't know if we're going to get that. This is what I would anticipate though, just on a normal trade setup. If I wasn't trying to pass a challenge, this is what I would anticipate, a full 1 to 2.2. We want to see price respect this fair value gap. We want to see price return to the body of that hourly order block and almost 50% of this 15-minute breaker. So we've got a 15-minute breaker, we've got an hourly order block, we have a 5-minute fair value gap. That's enough for me to say that this is a high quality trade setup. Looking at some Discord chat of a community I'm in, just keeping up with some guys over there, seeing how they're doing. Again, once I'm on the charts and I'm doing my analysis, I don't get into my communities. I'm in a couple of communities that I just keep up with guys. We trade similarly and just keep up with each other. And so, but once I'm on my charts, I don't get over in there and start following what everybody else sees and what everybody else is doing. I will glance occasionally, like we're halfway through this session already, and I'm like, hey, what's going on? And so I'll just glance through there, but I'm not doing that to go, oh, do people see what I see, or are they doing what I'm doing, or are they doing something different? Am I wrong? You have to trust your analysis. You have to sit at the charts, turn everything off. I don't have Twitter on right now. I have the Discord open, I have Telegram open, but I'm not actively just like scrolling through there constantly. I want to be focused on what I'm doing right here. Peek over at dollar. Obviously you're seeing some now that we've grabbed liquidity, you're seeing some resistance there. Price can fall away after we've got that liquidity grab. It'd be nice to see the dollar want to try to make a rally up higher here, only because that would be in line with our pound trade setup that we just identified. Seeing the dollar drop a little bit into this hourly candle. It's already done it a little bit. It's made a wick. So I would like to see it come down just a little bit more and then make a run up and leave this big imbalance here for something tomorrow. But when you've had 3 straight days of bullish, strong bullish run, it's left vol imbalances behind. Like, you would anticipate now, it's reached its initial levels. There is a daily volume imbalance above it. You're getting into a daily order block at the top of this weekly fair value gap. There's a daily order block right here. So probably wants to get up into that. That's why I think it's going to close in that fair value gap right there. But I want to see price pull back just a little bit and give us our little 5-minute entry here. On a 15-minute time frame, you can see from this leg down, you take this down candle down. This would also line up with an optimal trade entry on this leg down. It would be back above 50%. Yep, that's kind of what we're, again, just more lining stuff up. If this 30-minute order block, or if this 30-minute candle closes without triggering us in, it leaves a fair value gap right here that then you could use. Price comes up and fills in that fair value gap and then drops. It's reaching into that hourly order block right now. It does not have to come all the way back up to the body. I want it to, just so I can get the entry that I want. But I know a lot of traders that just use hourly order blocks, and as soon as it hits and touches the wick of the hourly order block, they're getting in there and their stop is up above the body of the order block. So I know that there's guys taking that trade right there. As soon as this became a valid order block when this candle closed below it. So you could get right there and put your stop up there. But I want to see it come up closer to that body and retest that 5-minute fair value gap and about halfway through that 15-minute breaker block right here. Haven't read any news headlines today. Oh man, it's always one of my favorite things to do because they're different every single day. They say one thing one day and they'll use the exact same opposite reasoning the next day to say something else. Headlines for the pound dollar. Debt ceiling hopes lift dollar to 7-week peak. Debt ceiling hopes. What does that even mean? Like hopes that the debt ceiling defaults or hopes that the debt ceiling agreement gets reached? It doesn't even make sense. Pound dollar. Sterling struggles to perform as US dollar marches higher. Well, duh. If the dollar is strong, pound is going to be weak. Euro is going to be weak. And oppositely, yeah, what was the last one? Sterling rally running out of legs on drab UK outlook. Is it drab over there, Mohammed? I don't know if you're still in there, Mohammed, but is it drab? Is it drab in the UK? That's what the headlines say. Weighing down on the sterling. I hope that the sterling is getting weighed down so that I can get triggered into this trade and that drab UK economy will help me pass phase 1 of the 10K challenge. I'm up 6.7%, so if we lose this, I will still be just over 4% up, which is perfectly great because then the next 1 to 2 trade wins also puts me over the top. So if I win one of the next 2 trades, I'll pass my challenge. And I'm a 50% win rate, so I feel pretty confidently that the next trade opportunity, one of the next 2 trade opportunities, is going to be some good low-hanging fruit for us to grab and get through this. If I pass, I'll let you know how quickly Bespoke sends over credentials for phase 2. If it's quick, then maybe we jump into that tomorrow for phase 2. At least look for an opportunity maybe to get a jump on phase 2. Phase 2 for Bespoke is 5%, 8% for phase 1, 5% for phase 2. So I would already, if I was in phase 2, I would already have gotten 1.7% more than I needed to pass phase 2. And yeah, it's not going to cooperate. It does. It's like, oh no, we know where you want to get in, and we're just not going to give it to you. No, the market doesn't care about me. The market doesn't even know I'm in an account because I'm not in an account. This isn't a real account. This is a demo account. The market has no idea that that's where my entry is. All these traders that are trading prop firm accounts, especially on challenges, are trading demo accounts. There's no funds involved. It's just paper trading. It's just testing your analysis as a trader. That's it. That's all it's doing. The market doesn't even know you exist. Doesn't know your orders exist. They're fake orders. So you can't be like, oh, the market just knew where my stop loss was. Oh, the market just wanted to tag me out and not pass my challenge. The market doesn't give a crap about your challenge. The market doesn't give a crap about you. The market is just the market. And this is just waiting. Man, how long did we wait? How long did we wait? We started streaming 2 hours ago. And we've just been sitting here twiddling our thumbs for 2 hours and 15 minutes. We've identified an opportunity to try to participate in a lower move with the trend. And if it violates this low right here, if we get some displacement below this low, I will cancel my order and I'll get off for the day and just be done. But so I'm going to stay on for maybe 15-20 more minutes, and then I'm going to get off anyway because I'm tired of streaming. I tell you, I really only like to spend about 2 hours of the charts. You start trying to read into things that aren't there. You start trying to convince yourself of something that isn't there, and I don't want to do that. So if in the next 15 minutes we get some displacement below and we take out this low without triggering our entry, then I will be done for the day. If in the next 15 minutes we stay above, I'm just going to set an alert right here, because if it doesn't happen in the next 15 minutes, I'm getting off either way, and then I can just close my charts and wait for an alert. If it hits there, we delete our orders, cancel our orders. Again, I'm not telling you to take this trade. You have to decide if you think this is a good setup and in line with your system. You have to decide that. Do not take this trade. This is not financial advice. This is a demo account. This is paper trading. I'm not giving out live financial advice. I'm showing you how you can demo trade and pass a prop firm and get real money from a prop firm. Most prop firms do not copy their traders' trades. I think it's really interesting. I don't know if you guys know My Funded FX. They're a newer prop firm too. I really like them. They're a no time limit firm. They've blown up pretty quickly in the prop firm space in this last 6 months or so. They're doing great work, but they're very active on Twitter. Their CEO is on Twitter. He talks a lot. They share a lot of their stats. And I wonder, because I think most prop firms do not copy their funded traders. I think most prop firms are using fees paid by losing traders to pay out traders who make profits on their funded accounts. Now, they probably have some fancy algorithm that tells them which traders to copy on their funded accounts and at what risk level they should use on that, so that they can make money on good traders. I think that's the goal of every prop firm should be to identify good traders. And if you're not leveraging their skill set, but you have to have good risk management to do that. So they're not, a funded trader just gets funded. They're not going to put them and start copying their trades right away. I guess that's what I'm saying. So I wonder, because so far these prop firms are staying in business because only 3%, I think the highest I've seen is like 4.5% of traders, of funded traders, actually get payouts. So 4% of traders who take challenges get payouts from a funded account. If that's true, I wonder, what is the percentage of traders that knocks prop firms out of business? What's the percentage of traders that have to be getting payouts to where they can no longer just use challenge fees and they've got to start using trade copying from actual good traders? Because if the prop firm model is people pay challenge fees, we put all those challenge fees in a bucket, we have a few good traders that reach funding status and then they receive payouts, and we pay them not because we're copying their trades, but we pay them from this big bucket of challenge fees over here. They get paid out. I'm guessing the first time you get funded, you're not getting copy traded. I'm guessing if you've been a funded trader and you haven't blown an account and they've given you maybe 8 payouts or 10 payouts or whatever their number is, they may be like, hey, we can copy this trader's trades. He's proven over this last 6 months or 9 months or a year that he's a consistently profitable trader. So we can copy that guy's trades. But those people who just get funded for the first time, they're not copying your trades. You're still demo trading. You don't have live funds that you're trading. And if you make a profit, you're getting paid from that challenge fee bucket, not because they copy your trade. So if 3 to 4% of traders allow a prop firm to make money off of the challenge fees that are left over after they've paid out their funded traders, they're making a profit. I'm guessing it's a very, very small percentage of funded traders that they're actually quote unquote A booking instead of B booking. B booking would be demo trading. A booking would be they're actually live in the market. I'm guessing it's a very small amount of funded traders that they're actually copy trading. So if suddenly there was a massive influx of successful and consistent prop traders on their accounts, and let's say it went from 4% to 8%, could they handle an 8% amount of traders being profitable? I'm not sure if I'm making sense to you two guys as I'm explaining that, but it's like I've been wondering that. I may actually tweet the CEO. He's pretty responsive, and be like, hey, what is the percentage of profitable traders needed to bankrupt a prop firm? Because I think there's a number there that makes sense. Like, because they're not copy trading everybody. If 10%, if it suddenly goes to 12% or 15% of the people who are taking challenges get good and they get funded and they start getting payouts, is that too high of a percentage for that prop firm to stay in business? Like I think they need a small percentage of people to pass and get funded for this model to work. The more I think about it. And I mean, it doesn't really matter to me because my goal is to be in the top percentage. I want to be one of those great traders. So it doesn't really matter to me as long as they keep paying out they're good traders. Fantastic. And the masses are going to continue to gamble and not pass. The masses are trying to get rich quick. The masses are trying to cheat and game the system, and you can't. You have to be patient, and you have to go through the process, and you have to get broken and rebuilt over and over again. So we have not been triggered in. Very close, but we have not been triggered in yet. Coming back up to that 5-minute fair value gap. Seeing our hourly 30-minute candle is going to leave a fair value gap, it looks like here, right around our 5-minute fair value gap, actually. So it'd be nice if this 30-minute doesn't trigger us in now. The next 30-minute could pop up, get us in. Oh, we're live. We're in. I did it right there, that little nick up. So we'll see what happens here. We're live. We either get slapped or we pass our challenge. And I don't really care either way. Honestly, I don't. Because even if I lose this, one winning trade after this and it passes it as well. So if we lose this, we're still back above 4% a little bit. So we'll just wait and see. The dollar is pulling back off of grabbing that liquidity high as we anticipated, but we needed it to get to where we wanted it to go. So if it's going to come up higher and make another attempt, another dig into that, but it has made a new high. So it doesn't have to go any higher. It could just fall away here. Euro as well. What is US30 doing? Corey, I know you said you'd do US30. Did you get in that drop there on US30? It's kind of nice. Once I get triggered in, I usually like to go to a higher time frame to monitor my trades. I don't like to sit around and watch candles print on lower time frames. It can stress you out as a trader. So yeah, we're just gonna kind of watch here on the 15-minute time frame. Getting an initial reaction off of there. Euro dollar's been running hard. Hasn't really given, in my mind, it hasn't really given a lot of entry opportunities, a lot of opportunities to chase. If I was looking at the euro dollar, I would have wanted to see a liquidity grab up above here before it made this big run down on the 15-minute. On the 5-minute, there was no breaker for me in here. There was nothing in here for me to do. Pound is what I've kind of zeroed in on. So getting a pop up here. Dollar is hanging strong right there. Our 30-minute, I'd kind of like to see this 30-minute close without filling in that fair value gap, but don't know that it will. We can take this alert off. We got triggered before it went down there. Let's see. If price closes above this fair value gap, then it's not respecting bearish order flow. And I would anticipate our stop loss getting slapped there. Getting a nice rejection off of that now. 3 minutes left in this 30-minute 30-minute candle. I don't know if this is exactly where I passed my challenge. I'll have to watch it over there. Not that I don't trust Bespoke to close me out when I hit my profit target, but we'll see. Now that we're live and we're in, I may keep streaming now that we're live, just to see if we can pass while we're on the. It'd be cool to pass while we're streaming here. It's going to be somewhere around here. It needs to come back down into here, at least. I think it's going to be right around there. Bottom up, yeah. I mean, there's nowhere to go but up when you start at the bottom. 0 viewers for like the first, I don't know, 3 or 4 days, and then you guys joined in a couple days ago. So I'm glad you're here, man. Would love to have more. watching, but you know, I'm not necessarily doing this for the views. And actually, the more I do this, the more the algorithm will push it. And also, the more receipts I can show successfully completing challenges and upscaling this thing, the more attention it will draw as well, and the crowd will come. I'm just trying to be consistent, honestly. Just do this every day. It helps me talk through exactly what I'm seeing and identifying my good setups. So, man, I got something in my throat. About a minute left in this 30-minute candle here. I don't think it left a little fair value gap here on this 30-minute candle. So slightly into profits here, about $25 or so. And I need to get $125. A little bit more than $125. And we can knock out phase one. If it can close where it is now, and the next 5-minute candle opens, next 30-minute candle opens, and we get a pop down, we might just close that baby out. We're at 730 on my MT4 over here, 10,730. So I need 70 more dollars, and I might just get my mouse over here ready to go. In case we get it flies down here quickly. I don't want to miss it. A little move lower here. Would like to see it come pretty far down. Again, I don't know if it's where exactly I have my box on TradingView. I'm watching it over here on my MT4. So just being ready to close it out. When we breach, we're at 745.60. We're at $95 profit, 98, 105, 120. There it is. There it is. Close it. I've clicked close 3 times. Oh no, I didn't. Oh my gosh. Y'all, I am $3. I clicked close and it went back up. And it's at 10,797.50. I need $3.50. Oh my gosh. It was over and it didn't close. So Bespoke did not close it when I crossed the 8% profit target. It was only over. Now, to be fair, it was only over by like $1 and it was like 801.50. I'm not kidding you right now. It's at $797.50. $3.50. And so now it's like, what the heck do I do? Do I chase this down? Do I think it's going to drop lower? Oh my gosh. I have two mouses on my setup. I have the mouse that I use for TradingView, and then I have another mouse for this my terminal over here on with MT4. And I was on my TradingView mouse trying to close the trade while it was in profit. And I was not on my MT4 mouse. And I was clicking. I was like, why is it not closing? And then I realized I was on the wrong mouse. And by the time I clicked it on the other mouse, it freaking closed it I wonder if I messaged Bespoke Funding and was like, yo, you said it would close when it reached profit. It didn't. I closed it and then it was back under. If they would honor that. I'm not going to do it. It's $3.50, man. Oh, that sucks. I cannot believe that just happened. Oh, live freaking YouTube, man. If I wasn't streaming, would I have made that mistake? Oh, God, that sucks. Oh, well. We will find $3.50 here. If it comes back up, maybe I'll risk like 10 bucks. No, I'm not going to do that. I desperately want to take a trade here to get $3.50. I'm doing it. There it is. There it is. $10,803.50. Phase 1 is in the books of our 10K challenge. There it is. Woo! 7 days, baby. That's how you freaking do it. That's how you freaking do it. You saw it live right here, guys. We passed. Oh, man. I'm glad that's done with. I cannot believe I freaking screwed that up the first time and had to sweat out just taking a random... Now, I did get back in close to where my original entry was. Well, it wasn't a complete gamble, but I was like, it's $3.50 on whatever lot size that was. It just had to move a couple pips. I mean, pipettes, really, like half a pip, and that's what it did, and I closed it real quick. So in and out. Technically, Bespoke should have closed it like they said they would, and it didn't. So I just did it myself. Oh, my dogs are freaking out. Somebody must be walking by with another dog. I'm going to mute my mic while they're freaking out. My Lord, they were losing their minds. I don't know if y'all could hear that or not. All right, now I will be interested to see how this all plays out. And if we were strictly going for a 1 to 2.2, that would be back down here. So my dogs are running down in here now. What are y'all freaking out about, man? My goodness. If this was a, how this real trade plays out, if this is 1 to 2.2, I don't know that it will. I didn't need it to today, but I will leave this up and see how it actually plays out. I'm gonna go screenshot the 1.5 or where I passed the challenge at, so that I can use that for my Twitters. We're gonna copy that image, have that down, and yeah, for the rest of it, we will drag that back out. We'll see if price is going to respect. If price does not respect that fair value gap and closes above it, I would probably cut a loss there, because you want to see PD arrays, bearish PD arrays respected. So this breaker, we're inside this 15-minute breaker, we're inside a 1 hour order block, you're inside a 5-minute fair value block. All of those things need to be respected, and if they're not, remember that 4 hour time frame left a fair value gap up here in this OTE of this big leg down. So it may, this 4 hour candle may want to reach up into that fair value gap, and if it does, it would obviously slap this stop loss. But we don't need to worry about that. At least I don't need to worry about that anymore. Phase 1 is in the books. We're good to go. Let me check my email and see if I've gotten any bespoke funding. Already got the credentials for phase 2. So, man, that was pretty instantaneous. So that's awesome. I don't know if you guys can see that or not, but that's the email. It says, welcome, Brad. Classic challenge, phase 2. In phase 2, you must continue following your profitable trading plan and control your risk in order to successfully accomplish the trading objectives. Once you pass phase 2, you will be moving forward to becoming a funded trader. And then it gives me my account login and server information and such. So it's pretty awesome. I'm going to see if I can pull up the dashboard. I'm going to see if I can pull up the dashboard. Let me close that out. Can I pull this up? Yeah, I can. Actually, let me log into it first so you're not watching that. And then let me pull up my bespoke funding program. Affiliate dashboard, maybe. I think that's my login. Oh, it was not. I'm surprised that's not remembered. Bespoke dashboard. Why? It's definitely that. Oh, all right. I'm going to click forgot my password. I'll set up a new password here. Man, I am so freaking stoked. That is awesome. Password reset. Here we go. New password. Even if it's a 10K challenge, I'm excited because any challenge you pass is a big deal. Any challenge you pass, it doesn't matter the size of it. It's worth getting excited about because you managed your system. You executed the trades. You identified the setups. You did it. You did it all. And you passed and you were rewarded. So it's a big deal to pass a challenge. All right, logging in. Here's my dashboard. Let me pull this up here for you. Oh, I gotta minimize trading view here first. Bear with me. Here we go. This is the phase 2 account right here. Let's go back to, how do I get to, oh, is this the one I just took? Yeah, okay. So here you go. You can see, here's all the stats and data from my, the challenge that we just passed. No certificates yet. I guess that doesn't come instantly, but it is passed. This green line is your profit target, and we hit it today. So we took 5 trades. 5 trades in 7 days. That's how you pass challenges. You wait for your premium A+ setups, and you trust your system. You trust the expected win rate for your system, and you let the probabilities trade out. 7 days, we passed. Phase 1, 5 trades, 3 wins, 1 loss, 1 break even. So I'm super happy about this. Let's look at some of the other data here. I don't know, this is the first time I'm logging into this dashboard, in fact. So current equity, you can see right here, we passed $803.50. Our win rate was 83%. Our profit factor is 4.93, which is fantastic. Average risk to reward is 0.99. The reason that is not 1 to 2 is because the break-even trade that we took, it was actually a small profit on when it wicked us out. So every dashboard that I've seen does not give you a true risk to reward ratio on when you factor in break-evens. I wish there was a way you could go in and factor out break-even trades, those teeny tiny small profits. If I had taken that as a loss, like if I had moved my break-even to just behind my entry, and that would have been a loss instead of a profit, that would have made my risk reward higher. But because it factors in that 1 break-even trade, it says I only had a 0.99 risk reward. I used 8.5 lots total. My trade expectancy, my average win. So here's my average win. This is the true, and this isn't even true either because my average win was over $400. But again, because of that teeny tiny win right, so I had a $12 win. Oh, that was the one that I guess I just closed. Was that today? Yeah, that's the one I used to pass. So that $12 win I used to pass, and this $43 win I used to pass lowered my average win. You can see, here's what I did. I took 2 trades today, but that's really 1 trade because I tried to close out the stupid trade on the wrong mouse, and I had to jump back in real quick and scalp $3. But very consistent all the way through here. Had the 1 loss to start off, and then we just, we just were great. We're good. So there's every trade I took, every position I took. Shows you exactly what happened all the way through the entire process. 7 days, 5 trades, 1, 2, 3, 4, 5. I know that says 2, but that was trader error, not a true trade in my book anyway. All right, so that's what everything looks like on this side. So I'm excited. I'll load up the account tomorrow, and we'll jump into phase 2 tomorrow. We have to make 5%. We will start that process tomorrow, but I'm going to get on Twitter to let everyone know the good news there. And we will see you guys back here tomorrow morning. I'll be on at 7 a.m. Eastern, New York time, and maybe we'll find something else. So y'all have a great day. Good luck on your challenges and what's going on.